Sorry, this is part two. So on limited partnership, um, general partners have equal rights of management. So limited partners are not usually part of management. And the partnership can dissolve unless otherwise stated in the agreement. The next type of business um, is limited liability partnership. The ownership usually has two or more general partners. Formation, it's formed by state statute, um, and general partners must vote to convert to a LLP if that's what they want to do, and must file documentation with the Secretary of State. Personal funds is used as capital, and the taxes are divided between partners, and which each person pays at their own personal rate. An informational return has to be filed, so that means that the partnership can be seen as a separate entity. Liability, that depends on the state statute. Depending on your state, if you have partial shield states say that general partners are liable for their self and for the business only. Full shield states say that general partners are only liable for themselves. Agency, all general partners are agents. Management, all partners have equal right to management. And the partnership may dissolve on death or withdrawal unless otherwise agreed upon. A person can transfer their interest in the LLP with consent of all the partners. So in our narrative, let's say Sally left the firm and transferred her interest to John by agreement, of Amy's agreement. Amy elects to change the business to a limited liability partnership, making John a general partner. John is going to take over Sally's practice and cover family law, but John has a mind for business, so John wants to have a say in how the business is ran. And so by making this change, both Amy and John are equally liable. The next type of business we're going to go over is a limited liability company. Limited liability company does not have many restrictions on the number of owners, but they do ask for a minimum of 2 owners depending on the state you're in. You can be, a LLC can have one owner. Of course, this depends on states. Again, the formation is statutory. You got to look up those state statutes to see what is allowed and what's not. Usually you'll have to file statements, articles of organization with the Secretary of State. Now, LLC opens up the company to investors as a way to get capital. In the LLC, the income is split among the members, and an informational return is filed on behalf of the LLC. So for termination and transference, that depends on the state, it depends on the agreement, and it depends on the articles of organization. But another thing is that the limited liability company must be wound up and file articles of termination. So with our narrative, let's say business is booming. Amy and John have added more members to the firm and decide to form an LLC. Because now with so many members, there's so many ideas now of expanding the company. So the best move was to turn into an LLC. Now, for the last business entity we're going to discuss is a corporation. So there are no or few restrictions for ownership of a corporation. The formation is by statute, state statute. And of course, you must file documents with the Secretary of State. Capital can be raised by investors. Investors can be a wide variety of investors, like stock market, selling, different forms of investments. The shareholders, directors, and officers all have limited liability. The corporation is a separate entity of its own and covers its own bills and other obligations. So for agency of a corporation, the agent has to be elected by the shareholders to be an agent. Now, under management, the shareholders elect a board of management. A board of directors that oversee management. And for taxes, the shareholders are responsible for the income tax, and they're responsible for income tax on dividends received, which basically is double taxation. The corporation is responsible for taxes on corporate income. So to terminate, the business does not dissolve when someone dies. Basically, the stock of that person or the share can be sold without affecting the corporation. So business can go on as usual. Now, for our narrative, our company's doing great, adding more members. We are an LLC. All the members of the LLC decide they have expanded so much that they need to incorporate the business they need to make the business a corporation and expand the firm. The members, they want to take advantage of an employee benefit plan where they can essentially enjoy tax-free earnings as the employee benefit plan and take advantage of tons of other benefit programs for employees. So everyone can basically enjoy the profits of this business, and they get to continue to enjoy limited liability. And the firm is a success. Thank you. Have a good night.